Okay, so it's September 27th, 2016 at like 10:30 at night. Uh, I know I haven't done one of these videos in a while because there really hasn't been anything to talk about. Market really hasn't gone anywhere. Nothing's really done anything. But I felt inclined today, just because all we hear about now is how the market is going to crash, because either if Donald Trump gets elected, which doesn't look like it's going to happen anyway, um, or just the election uncertainty in general. Deutsche Bank being the next Lehman, stocks are overvalued. The Fed's going to raise interest rates, and the party's over. Uh, and I'm here to say it ain't going to happen. Okay, the market is not going to crash. All right, you don't get a crash with every single person telling you that a crash is coming. In fact, you usually get the exact opposite. I've talked before about all these super smart, super successful investors talking about a crash here. They've been talking about it all year, basically. From Icon to Soros. The latest one that came out this week was Rob Citrone, and let me just say that I know Rob Citrone, and he is an incredibly smart, incredibly hardworking guy. He is basically the epitome of the American dream. The guy is super successful on the back of being a very diligent, very hardworking, very committed person. And not to mention the fact, one of the greatest human beings I've ever known. Extremely philanthropic and very generous with both his money and his time. So, no disrespect to Rob Citrone whatsoever. But, let's think about the psychology of these guys. The hedge fund industry is getting pummeled. The returns have sucked. And what they need more than anything is the markets to go down. They can't get long here. We've talked about this all year. They cannot get long here. There's career risk. And they need the market to go down to justify their existence. They're clearly underperforming on the upside. And if it goes down, the market goes down and they make money, they're back to being heroes again. They can rebuild their business. Now, I'm not saying they're purposely just saying this as a marketing thing, although that would be pretty good. Scare everybody into thinking the market goes down, they need to have their money with them. I'm not saying they're doing that necessarily, but in my view, it's probably subconscious that this is what they need. Therefore, this is what they think is going to happen. And it's just not, okay? The market does not crash when everybody is calling for it. And again, no disrespect to Rob Citrone or any of these other guys, but did any of them make money during the financial crisis? For the most part, they all got killed. And now they're calling for, the biggest move down since the financial crisis. Well, they didn't get that one. And they really haven't made any money since then. And they ain't going to get it right this time. You can't get it right when everybody is calling for the same thing. So, look, at this point, Trump doesn't look like he's going to get elected, right? It looks just like Brexit. Didn't look like Brexit was going to happen. And it did happen. And what happened? The market went down for like 2 days. And that was the very last chance you had to buy the market since then, right? I would think that if Trump got elected again, it would be a surprise, just like Brexit. The market would probably go down for a couple of days, and it's going to rip right back up. What's so bad about a Trump presidency anyway? Yeah, he's a lunatic, but if he's going to cut corporate taxes to 15%, I don't think you want to be short stocks. You might want to be short society if you're a Trump hater and all that, but you don't want to be short stocks, okay? If he's really going to get away with those tax cuts, right? So forget about that. Let's talk interest rates. I don't get why. And by the way, Trump in the debate last night said, the market was a bubble and, done by the Fed. And as soon as they raise interest rates, the market is going to crash. Believe me. I'm sorry, Donald. No. Okay? No. Donald was saying that exactly what he does, which he I don't really think personally Donald Trump believes in all this crap that he says. He's saying it, obviously to get votes. He's saying what he thinks the people want to hear and what the people think so that they agree with him so that they'll vote for him. And that just proves it by saying the whole Fed thing is rigged and as soon as they raise rates it's going to crash. That's what everybody thinks. And again, the market don't do what everybody thinks. But let's get into the Fed raising rates. And I'm no economist, but from what I understand, the Fed's mandate is to keep employment high without creating inflation. So based on that, look, there's no inflation out there. There was an article on Bloomberg today about how food prices are having their steepest decline, in a very long time. Oil's not going anywhere. There's no inflation anywhere. So if there's no inflation, why raise rates at all? I mean, why wouldn't you want rates to be at zero forever? Isn't that the best business environment that you could provide to the world? Keep interest rates at zero forever. And when there's inflation, okay, then clearly you got to raise them, but there's no sign of inflation. Zero sign of inflation. We all know the unemployment rate's low, and we all know that the participation rate is at record low. So there's plenty, you would think, plenty of slack in the employment. So why raise rates at all? I don't even get it. Because savers are getting hurt? I mean, what does that even mean? So if interest rates are at 20%, savers are doing great, and everybody else is getting killed? I mean, that's such a bullshit line, man. You want high interest rates and to be a saver? Go move down to Venezuela. See how you're doing there with your savings, right? Clearly, if interest rates are high, it's because inflation's high and your savings are being dwindled anyway. So the whole argument is stupid. Now, they might raise rates, I don't know, but to me, I don't see why. There's no reason. And even if they raise them by 25 basis points, they're not doing any more than that. I mean, I just don't see how that's going to hurt anything. And again, sure, raise rates, the markets might sell off. Although I wouldn't even expect the market to sell off if they raise rates, because everybody already knows or believes that it's baked in, so that they're going to raise rates at some point. But again, that ain't hurting the market. Deutsche Bank going out of business and being the next Lehman, I mean, that's basically already friggin' happened. How much is that going to hurt the market? Now, I'm not here to say that I think the market is going to rip straight up. I do think it's going up, and I do think that the next new high is coming before any kind of big move down. But, I mean, from a positioning standpoint, the market is, semi-long in the futures markets and stocks. I mean, and again, to me, it's all about positioning, right? I've said that a million times, but here's the Dow positioning if you look at it. And if you look, I mean, here's your speculative positioning. It started getting super long here in August, right? And clearly, that's when the market stopped going anywhere, because the market was too long already. And for the most part, we know that fundamental guys aren't long. But systematic guys clearly are. When a market's making new highs, systematic guys are long. They're, for the most part, trend followers. So, yeah, they're long. And the proof there was you had that one-day move down here, whatever it was down 400-something points or whatever, and you lost a good 30% of the long, just in that week right there. So, can it go down because the market's still a little bit long here? Yes. But truthfully, it probably builds back up to the record longs again, which means new highs. Again, I don't know short-term which way it's going. And it's the same sort of situation. The S&P doesn't really have any positioning bias whatsoever. But the NASDAQ, again, as it's making new highs, sure, the market's getting long, and it was long again. They really started getting long again. August, by beginning of September, they were, close to record longs, and then, then we had the sell-off, and again, you lost 30% of your long interest. Because it's all systematic guys, and they just get stopped out, right? Same thing with the Russell, where they were getting, long as they've been in this whole chart, right, which is a year. And they went right back to neutral as soon as this thing did, and the Russell went right back to new high. So, from a positioning point, it's not like the market's mega short, so I don't think there's going to be a mega rip. If we did have some of this bad news, I think the market would get super short very quickly, just like it did the other day when it, last week when it dropped, 400 or 500 points in a day. We lost 30% of our long open interest in 3 days, right? If it goes down again, we'll lose another 30%, and then the market's going to start getting short, and then it's going to rip right back up. The market's going to get short so fast because the systematic guys just get stopped anyway, and the fundamental guys are not going to miss this, biggest move down since the financial crisis move, so they're going to get short. And then if hopefully that happens, because it will be the greatest time to get long. But in the meantime, we ain't crashing. It's not happening. Don't believe the hype. Okay, because it's just not the way the market works. Okay, good luck.